Well, whether you're a longtime investor or just getting started, there are some common mistakes that you can make with your interests. And we're here to discuss the details as president and CEO of Wilsey Asset Management, Brent Wilsey. So good to see you.
Good to be here.
All right. I'm sure many of our viewers are wondering, oh, those investments that I used to make. Oh my gosh, we're talking about the common mistakes right now. First, let's talk about, well, the market is down. So I'm sure many are thinking, I'm going to just sell my house right now.
Well, exactly. And what people it is, I mean, right now it is hard. The S&P is down like 24%, NASDAQ's down 34%. It started kind of wear on people. And now they're starting making silly mistakes because it's just wearing on them. And I've been doing this for over 40 years of managing money. I've heard a lot of different mistakes. The big one is, I'm just going to pay off my mortgage because I'm losing money anyways. At least if I pay off the mortgage, I can, make 2, 3, 4%, whatever that mortgage is. So that's a great thing. Well, the thing they're not realizing is that your mortgage probably goes out 15, maybe 20 years, maybe longer. The markets will turn around. They always have. I've been doing this for, again, 40 years, over 40 years. I've gone through 17 corrections. Every single time it comes back, it will this time as well. So don't panic and say, well, I'll just pay off the mortgage, get a guaranteed rate of 3 or 4%. No, look at your investments. Look at what you're paying for the investments.
That's a great tip. And now let's talk about the behaviors with the stock market. I know so many eyes are on the market every single day. Should I buy? Should I sell? Should I buy? So what are your thoughts on that as far as investment mistakes?
I mean, another one that people do kind of say is like, well, sell now before you lose more. And we just had the inflation report came out, when was it, Thursday. And oh my gosh, the Dow was down 500. Then I was closed up 800. And what happens is that the media is great about talking about the bad stuff. If you dig down those inflation numbers, inflation came in at 8.2%. That is an improvement from months ago, but they pulled out this thing called core inflation. Oh my gosh, now core inflation is up 6.6%. And what they don't tell you is that that takes out food and energy. Very important to people. Don't want to pay more for that. But also too, that core inflation includes rent, which is about 2/5 of that calculation. And what that does is that, well, wait a minute, I'm not renting, so it doesn't affect me. So these are things that scare people into doing the wrong things because you hear this data and then you get this feeling, well, I'm going to sell now because that was so bad. And you shouldn't do that. Look at the value of what you have, and the economy and the market, they are separate to some degree, so I'll be aware of that.
Oh, we all need to take notes on that one. And now let's talk about speculation with your investments.
This is one thing that people do is that they speculate too much and they think, well, I'm down, I'm going to try to make it back more. The one that I don't like, Teresa, is where they say, well, you're young, you have time. That's true, you have time, but you're missing the best thing ever called compounding. If you invest $10,000 now and you go out 28 years, in 28 years that is worth $320,000. You didn't even add anything to it over that time frame. So you're missing the compound. If you go, 42 years, $640,000. So don't speculate with the money, even if you're younger. Don't go for that thing, oh, well, I'm younger, I can afford to lose it. No, you're losing the benefit of compounding over time. So don't do that.
A lot of your clients come in as this is one of their biggest problems, right? Investment mistakes?
Yeah, investment mistakes. The other big one they make too is watching things all the time, watching the market, watching the tracking their stocks on a daily basis. You don't want to do that. It's just going to drive your emotions crazy. We tell people, look at your account twice a year, January 1 and December 31st, because in between it means nothing at all. And I tell people, out of a 7-year period, you're going to have a couple losing years, but you're going to have some great years in between there. Don't focus on the daily price of the stock. It's kind of like when you're driving your car and you look at the speedometer, yeah, I'm doing 65. You're going to have an accident because you don't know what's going on around you. So stop looking at the price on a daily basis. Stop trying to day trade. It does not work. Just focus on the good quality businesses you invest into, and you'll be fine long term.
I'm so glad we're talking about this right now, especially with inflation. People are getting scared and worried about their finances, their investments, and just that impulsive behavior that many people have. They want to just a quick fix on things, and they want to just keep busy and try to do something with their investments.
Right, and that's the thing. We want this quick fix, and you're not going to have a quick fix. As I said, you're going to have a couple losing years. That's 7 years. Be prepared for that. Be prepared for the markets to go up and down. I cannot tell you what's going to happen on Monday. And by the way, on Friday, we had good reports from JP Chase, Wells Fargo. They expect to be bad. Well, they did very well. So again, you're going to miss good long-term investing if you start trying to time the market, look at your stocks on a daily basis, try to speculate. These are all mistakes I've heard from people over my 40 plus years. They never work out. What works out is investing in good quality investments for the long term and being patient. Very hard to be patient sometimes.
Oh, I know about that. Thank you for breaking it down for us. Always so good to see you, Brent Wilsey.
Good to be here. Thank you.
Of course, thank you.